Hey there, beautiful people of YouTube. Happy Friday to you guys. I've got a pop-up live here with Larry I did just moments ago on his page, and we covered stocks, but today we're going to cover stocks entirely different. Not going to cover the stocks I covered there a moment ago. We're covering new stocks. We're specifically going to get into the AI plays. I'm going to talk about Apple. I might touch on Tesla, even though I touched about it on Larry's show. Guys, it's we're getting here end of the week, and we're getting ready to go into next week. The markets had a strange sell-off yesterday. I gave a detailed explanation on that on Larry's show just moments ago. And I think it was a buying opportunity. So far, it looks that way right now. Tesla still holding up above 260. Larry and I are going to cut it up here today. Larry, could you say hi to the good people?
What's up, good people? How you doing? It is a pleasure and an honor to be here with you with my brother Stocks with Josh.
Just did an excellent live with Larry on his page. Stock Up with Larry Jones. And we got into some great topics about the market. We talked about what Warren Buffett's been investing in, what's been winning. But now
Google, Neo, Tesla.
Yep.
We covered all of that.
Yeah, I just want to quickly say that if, you guys are on my page right now, and, Larry Jones is a good friend of mine, a lifelong friend of mine, many decades. And I'll tell you something that I know about him. I will 100% vouch that this guy is a phenomenal momentum trader with extremely well-disciplined psychological trade habits, right? And so if you are just on my page and you're not on his page, I would recommend you go over there, because he brings the trades that I call in the fastest moving car at the moment. If he's talking about it, more than likely he's trading it and he's making money on it. All right, but let's just get into some trades right now. I'm going to talk about a comment that I got on the live just moments ago that I didn't get to respond to, and that was Bristol Myers Squibb, BMY. Now, I brought this up just the other day, and I told everybody that this was getting ready to be a buy. And I explained that there was an inverse correlation to some degree between big tech and these healthcare stocks like Johnson & Johnson and Bristol Myers Squibb. So I said that when healthcare was peaking back in 2021, they were down on their lows, right? And now we get another run up today in big tech, and Bristol Myers Squibb came down to my buy target that I gave you guys on that day. It hit it today. Let me see if I can pull up that chart real quick. So let's see here, BMY, ticker BMY. Yeah, so I am just going to do this visually right now. Yeah, so I had said that it was going to be a buy right at $60, and that's exactly what happened. It came down, it flashed down today below $60, and it got bought right up back above it. And so that was a buy moment, Bristol Myers Squibb. There's going to be a rotation. So when all these big tech stocks like Tesla, Apple, Microsoft, Meta, when the Magnificent Seven begin to bleed off, you're going to see healthcare take off. We're seeing that rotation. We just saw almost 13 straight days of the Dow being up, and it finally had a break. And we're seeing big tech take the lead again, because the big tech story is not over. I did a video, I think a week ago, and I said the top for these stocks is not in yet. It's a bold statement, especially because they run up so high. I'm expecting some volatility and some vacillation here at the top, and another attempt to push a little higher on all of these. And that's going to segue me into Apple. I'm going to just ask Larry to give some thoughts on big tech and Apple, and then I'm going to give you guys an update on the Apple stock. Larry, can you speak on that for a moment?
Sure. As you could see, the indices at the time of making this, they're all green. They're all up. I'm just trying to not mess with the window. As you could see, the Dow is up 154 points. And as you can see, we are in an extended, you can call it an extended bear market bounce. You can call it whatever you want to. But big tech is still actually going, it's still going up. They're still climbing, right? Look at Tesla. Tesla is still climbing. Now, we also know that there is an inverted yield curve. We also know that something is going to happen. No one knows. I'm not going to go into the Nancy Pelosi joke with the crystal ball, but we do know that. We also know that all big tech right now at this point with the evaluations are overpriced. But meanwhile, in the short term, there's money to be made. Josh, as you know, that's why I've been doing all of these option plays on big tech. I just did one on Google and made some money on Google on yesterday. I showed it on the other page. You can watch it over there. So big tech is still climbing because of this bear market. I mean, this bull market. I'm gonna just call it a bull market right now. But here's one of the things, Josh, that I want people to know. Most of the times when you have the Dow closing 13 consecutive days positive, it's a sign that the bull market is going to continue. But most of the times before the bull market continues, there is a what? Correction, right? There's a slight correction, and by the end of the year, the S&P actually ends up higher, right? And so this could happen with the magnificent seven, all right, big tech. And so I just want to give you a long-term perspective and a short-term perspective. Short-term perspective, there's still money to be made even in big tech.
That's wonderful. I appreciate that overview, Larry. Let me quickly comment on Tesla, Apple, and then Alphabet and Amazon. Super brief. Tesla, I want to remind you guys that the trade range is between 260, and I gave it to you guys more than 10 days ago, 260 and 290. And if we're still above 260, then I want you to remember 290 is still in play. 290 disappears if we close definitively below 260. But if we're above it, then we can absolutely move back to the top of that range. Now, I want to give you guys an update on my Apple stock play. Apple, maybe I was being too conservative. I really wanted to get in around $190. But I also gave you guys, when I covered it last, that resistance was at 194. So when we broke above that just the other day, we've now pushed into a zone where we can go all the way back up and test 199. And so that's the current play. In it right now, back up for a back test to $200. And then we've got Amazon. Amazon and Google are going to be the late to the party winners. We saw it this week with Google. Their cloud service was good. Their advertising business ticked up. Their AI was on point. And I think we're going to see a similar story with Amazon. When it dipped down to 126, I came out here and I said, I didn't come out and say bye, 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 because I didn't want to do that. That's not the way I want to roll with you guys. But I told you that I was buying, that I was getting in, and we've had a big run up, and the run up has just begun. I think that we're going to get all the way up to 140. Let me just go quickly into the chart.
I got it right there in front of you.
There you go. Very good. Thank you. Yeah, we're going to get up, I think, to the 140 range on this. We might struggle around 136, 137. We might come in just beneath 140. But I'm thinking that Amazon is going to come out with a very similar story. Now, it's a complicated trade. Amazon is way more complicated than Google because they've got so many other dynamics. They've got the strike with the United States Postal Service that's impacting them. Walmart has been actually a pretty good play. I'm actually bullish and long on Walmart. That's in my long-term portfolio because these guys are beginning to move in on Amazon's business. So they're kind of late to the party. They didn't get the online ordering going as quickly as Amazon. They let Amazon sneak in and gobble it up, but they're getting on board with it and they're going to dominate in it and they're going to take some market share away from Amazon. So you're like, Josh, are you buying or selling Amazon? I'm going to say that Amazon's going to have its move, and it's going to have that move up here going into earnings, but it's a complicated story, and so I do expect to see volatility, but I'm bullish on Amazon. I think Google worked. Amazon's going to work. We talked about Apple. Let me get into the AI stocks real quick. So the big one that everyone's going to be asking about, I don't know if you can pull up SOUN, Larry, Sound. The big one is Sound because I've talked about it on my page. And so here's what I want you guys to understand. The very last time this broke from the dollar range all the way up to $5, it hit that like a wall. It got rejected. It came all the way down slightly below $1.60. So I want you to pause and think for a minute. This went from $1 to $5, back to $1.60. And where did it go next? It went all the way back up and hit $5 again, this time going a little higher. So if you're looking at it making a higher low, I think that that higher low could absolutely be around $1.90, right? And to be honest with you, as long as it stays above $1.60, it's still bullish. And just for perspective, if you're afraid that it can't get back up to $5, it just did it. It just showed us that it could run from $1 to $5, $1 to $5, $5 to $1.60, back up to $5. And so, yes, if we come back to $1.80 or $1.90, absolutely we could run back up to $5 because the AI game it's active. Man, we're right in the middle of this thing. It's not dying off. The AI narrative is not over. It's literally we've already rounded base one. We're moving on to the second base. I'm not a big baseball guy, but there's my baseball analogy. We're moving on. We haven't even gotten to the home plate yet. And so I think this is an active play. I told you guys that I was going to buy in a bigger chunk at $2. And everyone got excited because it came down to around 220 range and it popped back up to back around above 250. And everybody thought, oh no, I'm going to miss out. No, you didn't miss out. It's still going to come down. It's still going to go below $2. So when it comes down to $2, I might, and it came very close today. I think it hit 209 before I made this video. And a lot of you guys probably thought, oh no, I better buy it. And you say, Josh, do you know 100% that it's going to go down to $2? No. But I think very strongly the technicals are indicating to me that this wants to come below $2. And so I had mentioned to some people that I had a stop loss at $1.89. I've decided to change that, and I've lowered my stop loss all the way to $1.58. Some of you are going to be panicking, going, oh my goodness, this could go to $1.58. That's hard to explain stop loss theory. I think if we stay above $1.60, it's a stock I want to be in at this price point, a stock that can run all the way back up to $5. And, AI has cooled a little bit, largely just moving sideways, and it keeps pushing back up to the top of resistance. And so I think that Sound may do that again. So I'm bullish on Sound. I'm not scared at all on that play. Larry, any thoughts? Larry might have went and got a Did you open a coffee break?
Ditto. All right, go to your next one.
Okay, APLD. All right,
Yes.
guys. I talked about this in a little bit of detail on the live, but I'm just going to elaborate and say that I got kicked out at $9.10. I think that it's going to make a higher low somewhere around $8, and I think we're going to push towards that 990 again. If I counted it correctly, this has worked 5 times. If I can remember, I look at so many charts that this trade between 780 and 990 has worked over and over and over again. And I think that when we broke beneath the 990 and then broke beneath 910, it simply tells me we're going to come back and we're going to make a higher low and we're going to go at it again. That's my game plan. I'm going to remind you guys that even though I introduced these stocks and I am trading these stocks, small cap stocks, small position size. I'm not dropping $100,000 in Sound or $100,000 in APLD. These have been profitable, and I'm excited about making more money with APLD as well. So I'm bullish on APLD. Back at $8 is likely to be my re-entry. And on Sound, I am very likely going to accumulate anything beneath $2. I'm going to be increasing my position size.
So, Josh, I wanted to talk about APLD and Sound as it pertains to options. One of the things, as you guys see, if you're trading options on APLD and AI or AIC3, these low cap AI stock, when you're doing options on these, I make sure that I have a 2 weeks expiration date on these, and it has worked for me because one day it'll run up, it'll run up greatly, and then the next day it'll run down just as great, and it has these trends. On the up days, it's a steady up. On the down days, it's a steady down. I've noticed that with both of these AI stock, and so. I wouldn't panic. Now, you do you. Anything we say is not a suggestion to buy, hold, or sell. I've performed better with both of these stocks with options when I don't panic when it goes down, right? Look at the ranges that Josh just told you, which I agree with them. period. And so if you have a call option to go up, it may go down for 2 days. I take that opportunity to buy more, right? Because my expiration date is 2 to 3 weeks out on these plays. And then on the up days, I wind up winning. And then when I win, I take profits and then get re-enter the same position. And I've made a lot of money on both of these AI plays.
Larry, thank you. That's really, really good insight on the options for those plays. Thank you for
Mm-hmm.
sharing that. All right, I want to cover two more stocks, and I want to do it super quick. I want to talk briefly about Microsoft. Microsoft, you guys have noticed, if you've noticed, I've been covering it more over the last week. Why? Because the chart's beginning to intrigue me. And so if you see me talking about something, it's probably because I'm looking at taking a strong position in it. Microsoft in the chart view looks as if it's breaking down. I'm wondering whether that's going to be a fake out move. We had this large ascending wedge that I pointed out in multiple videos, and officially yesterday we broke out into the downside of that wedge, and today we broke back up and tested the top of the wedge. Now, if you're a technical trader, you know that what I just told you was extremely bearish, but I'm not convinced that the Microsoft story is over. I think this is potentially a massive fake out to the downside and could lead to a massive push back up. Now, I don't know that, but that's what I'm watching for. At the moment, you could say that the sign is decidedly bearish, but I'm looking for it to break down to, let me just look at my notes here, $322 to $318. And if I see a big amount of volume come in, and if I see a reversal there, then I'm going to enter into a position because I think it could actually go all the way back up into the channel and back to the top of the channel at $374, possibly even $400. Now, just watching this trade, it's not go buy Microsoft today because technically this trade just crapped out. But it's one to watch because these fake outs occur and they're often sometimes the most profitable ways of making money. I think Microsoft could be setting up for a fake out to the downside and only go from there to a reversal and be a monumental move up. I want to participate in that run up. So I've been talking with you guys about it more and more. And if I do jump in and I do see that we've got a confirmation of a reversal, I'll come out here and I'll let you guys know. On that note, I just want to thank everybody for hitting the like button. I appreciate all the likes I get for each and every video. But if you want to make sure to get that Microsoft turnaround buy signal, you've got to hit the subscribe button to get that video. And You've got to hit the YouTube all notification bell. Otherwise, you'll miss it. Occasionally, Larry, I get some comments where someone says, hey, the last thing you said to me about this stock on a video 10 days ago was X, Y, or Z.
Right.
Then I came around and I did a video, the day after.
There was 9 other videos in between there.
Yeah. And so, guys, I don't want you to miss the video. If you're going to follow me, I'm going to be honest with you. You pretty much want to catch every video.
You have to.
This market is liquid. Go ahead, Larry.
Yeah. Can I get in right here? Hey,
Yes, sir.
The way that Josh and I trade, you have to watch every video. I agree with him on Microsoft. Even after the earnings wasn't clear. If you listen to the earnings, what I mean by that is Microsoft, especially with AI, has way more upside than downside, even after, and I alluded to that just before the earnings on Microsoft. So I agree with you on Microsoft. I see more upside, even though it is part of big tech. I see more upside on Microsoft. So me personally, I'm not telling you what to do. I'll tell you what I didn't do. I didn't do a put on Microsoft, even after the earnings. It's just too risky because I see more upside. Also, too, while we're on the station break, I want everyone here to click the links below in the description. If you're on your phone, just click the title of this video, and I want you to download the moomoo app. There's a ton of free stock. How many free stock right now that are going on, Josh?
Well, right now they're giving away 16 stock. When you open up and fund an account, that's the up to level. And each stock could be valued at $2,000. It actually ranges from the low $3 price to the high $2,000 price. So I call it a stock lottery. But
There
the
you go.
reason why I like moomoo, Larry, and the reason why I talk about it, first of all, I researched the app before I chose to share it as an affiliate link on my page. I
Same
use
here.
the I like the fact they give the best news. They plus they give you a ton of news coming out of China, which I don't
Yes.
see on the other platforms. So you have an eye on two large markets, which I
And
particularly like.
Neo is where?
China.
Okay, go ahead.
And Alibaba is China. And you know what a
Yep.
lot of people don't understand, Larry? Do you know AMC is owned out of China? And that's not a Chinese stock exchange. It's here in the US, but they
Yeah.
are owned out of China. Matter of fact, let me just throw in, yeah, so click on that link to get the details for yourself. It's only available in the US and Australia, and each country has its own offer. So go check that out. But let me just quickly segue, Larry, to AMC. I didn't
Okay.
plan on talking about
Let's
AMC,
go.
but one, you guys know that I made an accurate prediction. I told you guys, and people think I am hating on AMC because I'm telling the truth about the charts. I predicted when it was $5.40, I predicted that we were going to get a breakout move to $8.50. I did it over a month ago in May. I don't have to talk about AMC. I'm not in. I actually did take a position on that interpretation of the chart. And it then, after I made that prediction, it bled down to $4.40. So it lost about 90 cents of value. It bled down slowly, and then in after hours trading, it popped all the way up to $8.50. Actually went to $8.75. And I came out in my comment section on the Moomoo and I said, sell, 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 sell. And I know that frustrates people because it's different than my opinion on Neo. If you guys have been listening to me recently, I've been predicting on Neo for over a month that we had a trend reversal and that we're likely going to stay in the upper range and test the upper range for a while. Unfortunately, I cannot give that good news about AMC. We have not had a trend reversal. The charts remain bearish to me. It's one of the most manipulated stocks in Wall Street. It's the hedge funds and the stock exchanges themselves. They are totally, the clearinghouses are totally trying to just take retail's money on AMC. And, I
Hey,
know that
Josh, you don't mind me going to Neo. Neo is up 30% in the last 5 days.
yeah,
30% in the last 5 days, 52% in the last month. And today again is let's say 9.5%. And the reason why I'm saying that is for those of you that are new to trading, don't just put all of your money into a risky stock. Like Josh said, you're fighting against a giant. You're fighting against Goliath, right? When there's other opportunities where you see movement or momentum, as you guys, Josh told you, I'm a momentum trader, right? So if I see movement or momentum in Neo, then I'm gonna go with Neo. But on the reverse of that,
that's
if
right,
I
Larry.
see a
Tell 'em.
long downtrend, a
How do you
long
feel
selling,
about it then, Larry? How do you feel about it then?
then I'm going to short the heck out of it as long as I see downtrend. So I want to
Larry,
be crystal clear.
are you believing what your eyes tell you? I mean, honestly,
Yes.
guys, let me just say this. Larry is a momentum trader, and I can tell you from my personal knowledge of all of his trading, he does not sit in dying stocks. It
Nope.
goes against his nature. Like
Cut them.
his patience for stocks that are going down is extremely low. I'm talking it's thin, thin. He's looking for them stocks going up. But
Yep.
let me just wrap up my thoughts on AMC, and then I want to
Please.
comment on Larry's comment on Neo. AMC, I told you guys when I did that video, I said that we're going to get up to 850, which we got to 875. And then I said to you, okay, here's the sign to let you know what to expect in the days ahead. I said, look at the candle, look at the weekly candle, the daily, weekly, and monthly candle, and see what shape it begins to show you. Now, you can't see the candle shape on Larry's chart, but let me just make this point. You can imagine the candle shape. There was $8.75. It's sitting at $4.55. What that tells you is the candle has a massively tall wick. And what have I told you? You got to start believing these technicals, guys. The candles, they're foreshadowing. And the tall wick said, it's going to make a new low. Now, it could have some volatility. I was asked in the comment section, Josh, I just got in for a play on AMC. I asked, well, what price did you get in? Because, yes, we could get a little dead cat bounce at $4.40. We could get a little dead cat bounce. But in general, in the next 2 months, apart from any amazing news story coming out, AMC will make a new local 52-week low, because that's what the technicals are telling us. And so I hate to bust anyone's bubble. I'm not against you. Someone says I'm shorting AMC. I'm not in any puts. I'm not shorting AMC. I'm covering it purely for your guys' sake, because it entertains, and I hope you guys can find some benefit from it. Any thoughts on that, brother?
Never fall in love with a stock. Never fall in love with brick and mortar. It don't listen for if you're trying to join an army. Me and Josh are going to down the road have some fun. I'm going to be team Shiba Inu. He's going to be team Doge. We're going to have fun with it. But let me tell you, if we see a reversal in any of these plays that we get into, there's a time to cut it loose. There's a time to take profit, and there's a time to short it. Don't none of this huddle stuff. All right, it's costing you guys. None of this stuff. So don't be true. You know, Keenan always say, trade with the chart, not your heart. I'm gonna leave it right there.
That's wonderful. All right, Neo, I want to comment on what Larry brought about Neo being up today.
Yes.
Thank you, Larry, for pointing that out.
Actually, it was up yesterday too.
Guys, so Neo is moved up, and I think that I actually said on Larry's video earlier this morning, I said we could get up to $15 pretty quickly. Now, the range is between 14 and 1580, and then we're going to hit a wall, and then we're probably going to fade back. Now, don't panic. It's not going down to $8 again. I don't see that, not unless they have a major misstep on the earnings coming up. But if their earnings show that they're doing reasonably well and they're ticking up and making progress and maintaining their profit margins for the most part, I think we're going to vacillate in this higher range, and we're going to come back and find support. There's two critical levels I'm going to point out to you. If we get up to $15 and $16 right now, then the next support will be back actually at around 13. If we don't get that high, then we're going to come back and find support at 1150, which would become a buy again. It'll be 1130 to 1150 for another push up to $14 or $15. Guys, mark my words. I don't have the crystal ball, but that's what the charts are telling me. And you have to keep watching every day video, because if I see something different, I'll let you know. But if I'm looking down the corridor of time on this chart, I see us playing with this range between $11.50 to $14 to $15. I see us staying in that range. So hopefully that's some good news for some of those Neo investors.
I'm done. Hey.
All right. Well, wait, I got one more stock. I got one more stock I've got to cover. And this one might be the best. This one might be the most entertainment value for everybody today. And that's Disney.
Disney my goodness.
Disney stock. You know, I've been wanting to cover Disney stock for weeks. And, but it's just one of these subjects where it's like, do I really want to open up that can of worms?
Can of worms.
But today we're gonna peel back, and we're gonna look inside the can at the worms. We might close it really quickly, but it's time to start talking about Disney. It's time to start talking about Disney, guys. You know that I have made these definitive videos, and this tail end of this video could be very important. About 2 months ago, I came out and I did a definitive video saying you missed the bottom, right? If you hadn't loaded up on Tesla at $101, if you didn't load up on Google at $83, if you didn't load up on Microsoft and Meta, you missed the bottom. We're not going back there. Now, I can't say that later in 2024 or later in 2025 that we won't have some major move down, but I would lean towards believing that we will not get that low. But, who knows what could happen in this market. But I'm going to make a comment here that there's a whole host of stocks that I do not want you to miss the bottom on. That's why I'm taking this moment, and I'm going to open it up to Larry. Larry and I, we don't talk about what we're going to talk about. Right. I don't know what his thoughts are, so I'm going to open up to him in a minute. But I'm going to tell you, don't miss the bottom on Disney. Now, Disney they've been acting a fool over there at Disney. They have turned against their core audience, which is let me tell you what the core audience, guys, is. And I'm not trying to ruffle any feathers, but it's Ma, Pa, and little Jimmy, and little Betty, and little Suzanne, right? That's your core audience. It's a family-friendly theme park. Okay, it's a family-friendly theme park. It's a safe place, kind of like back in the day. If you didn't have a lot of means, you might have a birthday party over at McDonald's, right? They had a little safe little jungle gym or little ball pit, right? And so their franchise, McDonald's, did really well in the 80s and 90s because they simply made a safe place to come and bring your kids, maybe have a little bit of fun time. These models of business have worked very well. But for some reason, we got here to 2020 and into 2023, and we're trying to deconstruct the family. We're trying to deconstruct, Ma and Pa's a villain. Ma can do everything by herself. I'm ranting now. Little Jimmy, little Susie, they don't even know whether they're Jimmy or Susie, or one wants to be Susie and the other one wants to be Jimmy. And so forgive me, guys. I mean, all respect, we're just opening up the conversation. Disney has lost its way, but, and there might be people that are going to give me crap for this because I would even talk about investing in Disney. Disney is too big to fail. They own too many brands. Their business is way too profitable and too much. Before I go into the next part, let me just give Larry a moment, because Larry, before I even go into where I see Disney going, let me hear your heart.
I'm not touching Disney right now.
All right, I'll keep going.
What I mean, as far as investing, I understand. I want you to do you, Josh. Believe it or not, we don't agree on everything, but there are some things that we strongly agree on, strongly, and I do strongly agree that Disney is into stuff it should not be into, and then to piss off politicians, though the governor of Florida he's just, I'm sorry. Well, I'm not getting into that. All I'm saying is there's a lot of things that are working against Disney right now. And now, believe it or not, Josh, the strike is directly working against Disney because Disney owns all of these media outlets. And Disney is again being called out. I don't know if you're aware of that, right?
Yes.
And so that is more pressure on Disney. And so I would just say you just go ahead and finish out.
Okay. Actually, Thank you, Larry, for that, because that's part of the balance. So, but let me explain to you guys, I'm not calling it a buy right now. I'm getting ready to introduce the setup and where I think it's going to go. The first part of what I said is that they're too big to fail. They've already failed in a way. I mean, they have really damaged shareholders. If you're a long-term Disney shareholder, I would imagine that you are pissed. You guys might even want to do a video called "I'm Pissed About Disney." We're getting everywhere, Larry. But let me just make it clear. So here's where Disney's going to go. I think we're going to go retrace all the way back to the 2020 low of around the $79. Now, it's important. I'm not going to put up any charts today other than the one that Larry's showing. We have the touch of $78 to $79 twice historically. Now, I talk about historic supports. Disney was on this path to this breakdown price, and I think it's going to hit $78, $79. And I want you guys to know I'm going to load up at Disney at that level. I'm going to load up at
and
Disney.
I will too at that level.
Yes, and I think we're getting there very soon. And I think that Bob Iger possibly has come back knowing that the ship was both sinking and on fire, and that there are people running around, on the deck, not knowing who or what they were. And he's come back to possibly unload, save, or sell the whole thing. And it shocks me to think that Disney could be up for sale, the entire thing. People have talked for years about Apple buying them. Apple, you say, well, why in the world would Apple buy Disney? Because Apple wants access to content. Don't underestimate their understanding of control over content. Steve Jobs turned Apple in what it was today because he began to get access to the music stars' content. And I'm going to tell you that absolutely these guys have the vision of understanding that acquiring Disney simply for their portfolio of American brands of entertainment has enormous value. Now, I'm going to tell you guys that. So we're going to see all it's going to take once Disney gets down below $80. All it's going to take is for a handful of news stories, and it'll be back to 90 and back to 99 before you guys can even figure out, before I can even get out here and do a update video on Disney. It's going to move fast. That's why you're being told now. And if you really pay attention to this channel, hit the subscribe button. I do tell you way before I take positions. I tell you when I'm looking to take the position. So you've had all the notice in the world. You can look at the support and resistance on your own charts. You can set your own buy orders in. And then I preach one simple message: patience, patience, patience. Warren Buffett's best quote, and I'm going straight to you in just a minute. Warren Buffett's number one quote that I love is that Wall Street simply represents money moving from impatient hands to patient hands. Go, Larry.
Love that. Love that quote. So just to add to what you're saying about Disney, you bring up a great point, right? A great point. And that is, there was this company called Facebook that was kind of in the same position as
Yes.
Disney is now, right?
Come on.
And abandoned their core audience. Let's go to the metaverse. Lost
Yep.
over
Yep. Yep. Yep.
$11
I love it.
billion with a B, $11 billion, right? And he just kicked butt on the earnings. And I believe, just like Josh said, that will eventually happen with Disney. Okay, we hear you guys. Here's what we're going to do. We're going to start first laying off employees. We're going to do a drastic change in our trajectory and our goals, and watch what happens, just like it did with Meta. Look at what Meta did. Remember, Meta was tanking.
Come on,
And
man.
then they said, okay, we understand, right? Look at this. Meta was up. Look at this. Now, year to date, Meta's up 159%, right? After that, a long 2022 was an absolute bloodbath for Meta because they abandoned their core audience. And I believe, just like Josh do, that Disney will follow the same path.
So let me give you guys my prediction. And hey, I want you to mark it. I want you to remember it. Put it down in the book.
And let's say this, and these will be. This is important. This won't be a swing play for me. This will be a long-term hold.
Yep. That's exactly where. Thank you, Larry, because you and I are on the same page. That's actually where I was going. People ask me all the time, because I do talk about a lot of swing trades, because swing trades are fun. It's what I'm doing. It's literally what I'm spending time doing, is figuring out buy low, sell high, like my grandpa told me. I said, marry a woman with strong calves and good teeth.
Oh God, you are
He
going to
literally,
get so much trouble, Josh.
he
You just
literally
a lightning rod for trouble today.
It all started with Barbie Fed yesterday, Larry. I just went off the hook. You got pissed and I got crazy. I don't know what to tell you. Okay, let me give you guys this, right? This is my prediction. This is in my long-term portfolio. I have a long-term portfolio that I'm getting ready to share with you guys. I've got a specific plan for that, but I'm just going to let you know this is in it. This is a sneak peek. It's I'm going to buy heavy if it can get down below 80. All right. It's in accumulation zone now. So if you can't afford to drop big money, then you start buying really right now as it goes down. Remember the play that I gave you guys with Google? I told you it would go into accumulation zone from 92 and below. That's exactly how it played out. It went from 92 to 84. That was the entire accumulation zone. And then it began to move back up, break above 92. Similarly, Disney is in an accumulation zone now. If you're wanting to be a more patient investor and you're wanting to do some lump summing, the lump summing level would be for a hit below 80. But then the target I'm looking at 2 years from now is 160. Okay. I think we can go from 80 to 160. Long-term hold. Disney will be back on track under good management. Pricing worked out. They'll shave off the unprofitable businesses. That's your game plan. Go ahead.
80 to 160 represents what percentage?
Well, I mean, there'd be 100% gain on that. That's what it would be largely.
That's for a long-term hold, you can't beat it with a baseball
And
bat.
if you are able to strategically sell covered calls and puts, and you're able to uh, trade call options every 5% dip, the minimum, the base increase is 100%, but you could 3x that, you could 4x that, depending on how good of a trader you are. And that's my strategy. I don't try to get into a ton of trades, 3 to 4. And then even in my long-term portfolio, I try to be very specific. And if I believe that Disney's going to be on a long-term course, I'm going to be wanting to take every 5% drop, every bad day for a call option to the upside. And so the 100 is just the base in my mind. That's how I'm viewing it.
You're talking about building generational wealth. That's a good way to build your long-term generational wealth. There are swing trades. I take all of my options, all my swing trades, and I actually feed my long-term. So me, for those of you that's taking a Larry Jones $5 a day, I'm just going to add that to that portfolio and continue my DCA. Remember, there's 1,000 roads to making money in the stock market. There's no one size fit all. Just like Josh said, I'm going to touch on plays that Josh doesn't cover. Josh is covering plays that I don't cover. It's better to watch multiple pages. You can make money with me. You make left pocket money with me. You make right pocket money with Josh, and it's a win-win situation. Josh, thank you for having me on your show. And hey, make sure everybody hit the like, subscribe, and notification bell. If you're new to the page, make sure you check out the links below. And also, too, good people, when you finish downloading a minimum of $100 into moomoo, there's also a link for Stock Up You, right? And I've just started this where Josh actually it will help the page out if you download it from his page. Even if even if you heard Josh from me, I want you to download it from his page, and it'll help Josh's page, and it'll help us to continue to give you guys the best.
Thank you, Larry, for being a guest. I want to thank all of you guys for hitting the like. Again, if you want those signals, those charts, and those predictions, and those daily calls on stock and crypto, you have to hit the subscribe button and the YouTube all notification bell. It's been a pleasure. The market's firing off. We're going to be moving into the weekend. I've got some other great videos planned. Specifically, I want to dive back into crypto, and as well as I've got some long-term plays I want to share with you guys. That's pretty much it for today. Thank you, Larry, for joining me. Thank you guys, all of you guys, for watching this video. We appreciate you, appreciate the community that we've got here on YouTube. Love you all.
Yes.
Blessings.
This was a cool pop-up, all right? Peace, love. How do you say it? Peace and blessings?
I'll say peace and blessings.
Peace and blessings. Peace.
Take care.